Hi guys, I'm Ryan Mack. Welcome back to another edition of the Trading Guys. In this particular video, I'm not really going to be teaching how to trade, but what I am going to be doing is covering everything kind of about the business, questions that people may have, maybe about me, how did I even start trading in the first place. I'm going to be covering myths. For example, people have this kind of idea that if you trade on a demo account to learn, you seem to win, but then when you go on a live account, you seem to lose, and they seem to have this kind of false information that a demo account is set up to make you feel like you're winning, and then you go into a live account and you lose. Now, actually, it's half true that when you go from a demo account, you will keep losing on a live. There is a reason for that. It's not really that the demo is much different from the live account, actually. The difference is in the size of the spreads, and when we get into it, I'll explain what that means, what the difference is, and then you can avoid it, and you'll see that actually it's not the case that a demo is designed to make you win, give you a false sense of winning, and a live is designed to make you fail, because companies want you to win trades. If you are winning trades, you're making money, you're going to keep placing trades. So why would a company set you up to fail? Because you're only going to do it for maybe 1 week, 2 weeks, a month at best, and then you're going to quit, and they're not going to make any more money from you, and then they're going to have to keep spending on marketing and advertising. So it's not in a trading company's interest for you to lose money in them. So that's that myth kind of debunked, but I will go into it in more detail later on in the video. The people who want to take your money are market makers, and we're going to cover what they do as well. Many people, I know guys who have been trading for years, right, and even trade for companies, and they still think that the markets, the movement in the markets is some random act of God, and I can tell you right now, it is absolutely 100% not. It's all manipulated by man, i.e. the market makers. They have to play by a rule book, a guidebook. They can only move like 200 pips a day, 600 pips a week. That's their kind of range. And they can't go without that because they could quite literally crash world economies. I'll give you an example, right, of how big the Forex market is. So the yearly GDP in China, right, in a year is just over $5 trillion. Now in the Forex market, $5.4 trillion roughly is traded every single day. Every single 24 hours, $5.4 trillion is traded. So if a market maker did not play by the rule book and keep in line, he could absolutely destroy world economies and world currencies, etc. So that's the reason why they have this market makers playbook. If you don't believe me, you can also Google it yourself. Check out guys like Steve Morrow, right? It's spelled obviously Steve. Morrow is spelled M-A-U-R-O. You can check him out. He has a course called Beat the Market Maker or Market Maker's Playbook and so on and so forth. The guy was a market maker and his mate was a market maker and so on. And he shares all the knowledge. His course is about a $4,000 course. Now, there was two guys. There was Steve Morrow and there was an American guy called Z. Now, I actually done Steve Morrow's course years and years ago, and I never traded after it because I never understood it. I then ended up in a job over here, which we'll cover in a second. And the guy Z, who was Steve's business partner, and the two of them were working together for years, creating the markets and blah, 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 he ended up being my chief trader. And this guy took me under his wing and he taught me everything. So even though I had done Steve Morrow's course before, it just blew my brain and I didn't understand any of it. One thing that I've noticed on trading courses that I've looked at, right, just over the years, I still watch, I don't believe that I know everything for 1 second. If some guy who's been trading for 2 weeks is like, hey, I done this course, it's really good, you should check it out, I will check it out because I think you never know if there's going to be a little golden nugget in there. If it's a 4-hour video and I'm watching it thinking, oh, this is nonsense, there may still be a small little golden nugget in there that I can add to my ammunition, all right, for trading. So let me jump straight in and I'll explain myself. So I've got some questions here from my DMs and Facebook that people have asked me, and they're really good questions, so I'm just going to read them out. How did you get started in Forex from being in the army and doing private security? Oh, that's a good question. Many people actually asked me that question. So what happened was, When I got out of the army, I went away and done close protection in Iraq and Afghanistan and blah, blah, blah. When I then came home, I then started applying for all these random jobs. Long story short, of course, this is. And I found this one, a job in Asia. Now, it didn't necessarily have to be in Indonesia. My company has offices all over Asia. London, Cyprus, Malta, blah, blah, blah. So they were only in Asia initially, right? And they then bought over all these companies in Europe, Denmark, Malta, Cyprus, Holland, London, and so on. And they wanted someone like a business development manager, native English speaker, no speakers, they wanted a few people to come in and bridge the gap and build new business. So long story short, I applied for that job. I just blagged it. I had never done that kind of job in my life. I had deleted 3 years of my CV and I put in as if I was doing sales that whole 3 years, which I wasn't. I finally got through it. I think it was about 5 or 6 different interviews. I ended up getting the job, came to Jakarta for the training, but wasn't sure if I was going to be based in Jakarta or if it was going to be Thailand or Vietnam or Singapore or Hong Kong or wherever. I didn't know. Pardon me. But at the end of it, everyone who was in my training class was like, yeah, I want to go here, I want to go there. And I just didn't care. I literally said to the guys, you send me wherever you need me to be. And they kept me here in Jakarta. So I was then trading I wasn't trading currency. I was then doing the business development side, the sales for this foreign exchange company, right? And it was about a year and a half later, I became great friends with the chief trader, Z. And I would always be in his office watching him trade. And every time I looked at his screen, I swear to God, guys, I would just be like, my mind would be blown, right? I would look at the screen and it would just confuse the life out of me. There would be lines everywhere, numbers everywhere, little sticks moving around. And honestly, I just thought, nah, I couldn't handle that. There's no way I would be able to learn that. So what happened was, my company asked me after about a year and a half-ish of working with them, the boss just walked by one day and it was like, hey, Rai, you want to learn how to trade? And I was like, boss, I left school when I was 15. Every time I look at these screens, my brain's fried. I really don't think that I would be able to learn it, honestly. And yeah, and I said, yeah, let me think about it, you know. So I was in the chief trader's office one day. This is gospel, this story, by the way. And we were sitting there, and my chief trader, his son is actually up for the next draft for the American NFL, Blaze Aldridge. You can check that out as well, no joke. So we were sitting in there, right, and Blaze, his son, was on FaceTime with him, and he was over in America. And he was saying to his dad, IZ, my chief trader, he was saying, Dad, can you get me this new car for starting university? And it was this Lexus. It was like fully loaded, 4x4, and I believe, if I'm not mistaken, it was round about $125,000, right? Roughly that kind of mark. It was roughly around about that region. And he said, can you buy me this new car? So Z, my chief trader, who is a gazillionaire, by the way, his swimming pool at home was designed by Disneyland, and it's like, the swimming pool was about 250 grand, right? So this guy is not short of cash. So Z was like to his son, yeah, that's fine, I'll square it away, give me a couple of days. And I just thought in my mind that Z is going to just go and buy his son the car because he has the money, right? But what he actually did, guys, no word of a lie, he traded the company account, obviously the huge company account because he's the chief, for about 4 days, 3 to 4 days, and he made like 193 grand. And from that commission, that was obviously his commission, I mean, from that commission, he sent that to his son to go and get the car. And I said to him, I was like, why would you not just buy him yourself if you're a millionaire? And you know what he said to me? He went like that, why would I spend my own money? And I was just like, yeah, fair enough. Why would you spend your own money? It makes total sense. And I then said to Z at that point, I said, Z, I shit you not, if you can tell me right now that you can teach me how you just did that, you know, exactly what you just did. If you can teach me to do what you just did in 4 days, what I will do, and this is legit, guys, I said, I will do there's an old Japanese kind of tradition, paying it forward to the apprentice and paying it back to the master. I won't get into that story, but I said to him, if you can teach me this, I promise you right now, I'll shake on it, every single month from money that I make from trading, I will give you 10% of what I make from trading from now to the rest of my life if you can teach me how to do this. I shit you not, guys, and I have not missed a payment to this day. I have stuck by my word as he has stuck by his word, and he taught me this. So yeah, that's it. The stuff that I'm going to be teaching, guys, I mean, if you buy Z's course, it is a $5 course. He has another one, which is about 1,500 bucks, which I actually think is better because it's more to the point. The expensive one is about 28 hours of videos. The other one is about 5 hours of videos, and it's like bang, 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 bang. This is what you need to know, away you go. But yeah, you don't need to. I'm going to be sharing everything with you anyway. But if you wanted a set up course where you can sit in your own time and watch it, then we do have those options, all right? So that is how I got into trading, guys. Let's see what else we've got here. I've got some really good things here. So I'm also going to be, I just want to add to that, I'm going to be breaking all of my trading stuff down, and I'm going to be making it super, super simple without all these, the Fibonacci retracement and ocelots and all that. You don't need to know any of that bollocks. We'll cover it, but it's just what we call bullshit baffles brains, okay? BBB. You don't need to know it, so I'm going to simplify it. Another thing I've noticed that I just thought of there, do you know how many trading courses that I've actually watched, right? And you can watch them for hours and hours and hours and hours. And at the end of it, there will be people who have watched that who don't even know how to place a trade, because none of these courses actually shows you how to physically place a trade on a platform. Now, some platforms are easier than others and some aren't, but I just noticed that there is not a single training course out there that says, right, if you want to place a trade, this is how you place a trade. This is a stop loss, this is a take profit, this is your lot size, blah. Nobody explains any of that. Everyone who makes a trader training course just seems to assume that you already know how to place a trade, and it is not the case, guys. So I'm going to be doing that as well for you. What have we got? Different ways of trading. Yes, well, look, I'll cover that as well. There's thousands of ways to trade, guys. I'm not sitting here right now telling you my way is the best, jump on board. My way is very, very effective. You can check out my MyFX. I'm now at 82% trading ratio, which is super, super high. In the last 5 weeks, you might see there's only a couple of trades there, right? And it's small amounts, but if you look at the percentage, in the last 5 weeks, my PAM account, from starting up this new project, not my full company account, but that's starting up this new project, it's already up to 16% in 5 weeks. Now that's phenomenal. When have you ever went to your bank and you've got a 16% return in a year? Now what happens in trading is, you will see in months, trading goes like this. It has dips and peaks all the time. So I've been at times, right, where after 3 weeks, I've had an account at 41.8% and it's been up here. And then the next month, it's been down to 17. And people have been like, oh, my account's dropped. Well, your account hasn't dropped. Your account's still up 17%. You've just had a down month and it's came down from 40. But then the next month, you get a better month and it moves on. That's the way it works. So you really have to base trading over a year. Now, the reason for that as well, there are heaps of months which are great for trading, and there are always months which are absolutely terrible for trading. August is one of them. December is another one. The reason for this is, whenever there's any big news in the markets, one thing that you can guarantee, if it's the red news, which I'm going to show you in later lessons, it's going to have a massive effect in the market. That's what you can guarantee. What nobody can guarantee you, is it going to go long or is it going to push it short? Nobody knows that. And when the news is released, the market just shoots off instantly. So it's a very, very dangerous time. People get this stupid notion from watching, it's not their fault, it's from watching all these paid ads, people in Lamborghinis that they've hired for 10 minutes and stuff. It's saying the markets are volatile, there's never been a better time to invest and trade currency. When it's volatile, that's the worst time you could ever trade. These guys are just trying to take your money, all right? They're not being honest with you, okay? So what else? Yeah, as I was saying, sorry, there's thousands of ways to trade. There are plenty of ways that absolutely work fantastic. So my technique is pattern trading. So I was not taught from a trader, I was taught from a market maker. And market makers create these certain plays because they have to work within a rule book. So I was taught by a market maker to trade in line with the market maker's plays and his rule book, essentially. Now, there are times, we'll come on to it in a different lesson, but there are times where you can physically see that there is a market maker presence in a currency pair, like let's say GBP USD. You may look on Aussie USD and there's just nothing there, and that means that the market is simply moving with buyers, with traders buying and selling, but there's no market maker manipulation in there. It's simply the market movement, and I will show you this on next lessons, okay? Now, with the techniques that I'm going to be showing you, this is what I want to say actually. If you already have if you've been trading for a while, right, and you already have a set strategy, set techniques, and it's all working for you, don't change over to what I'm telling you now and the stuff that I teach you, right? But you can pick out little golden nuggets from the stuff that I'm teaching you, and you can add that to your little book, your little basket of golden nuggets of indicators, to then paint that bigger picture of highest probability. Because there is not a single trade in the world that is guaranteed, right? We base trading on the highest probability. What is the highest probability of this trade going short or going long? And you piece together all these little indicators. Okay, this indicator here is saying it's going to go short. Oh, it's already massively overbought, so it's going to go short. There's two indicators saying it's going to go short. We're already at the high of the week, so it's going to go short. There's three indicators. But we've already got a Gartley pattern here on the H4. It's going to go short. So you build up all these different indicators, and you're like, right, I've got 5 indicators now telling me that this is going to go short, and that's why you highest probability. Now, different types of trading. Guys are asking me here, what are the different types and different styles? Yeah, okay. So we have pattern trading. So I am what you call a day trader. And I'm a pattern trader. I look for particular patterns. Now you can see these patterns, guys. If you go back to the market for 200 years, you can see these patterns. Now you will not see it in the same currency pair every single day, every single week. But when you jump on the markets on a Monday, you're going to look through. I'll look on GBP USD. Nah, can't see it, and there's no pattern there. It's just a flat market. It's going everywhere. There's no market maker interest in this particular currency pair. So you jump on to the next one, USD Swiss franc. Oh, there it is, brilliant. And then you know, okay, that one's got it, this one's got it, this one doesn't have it, and you move them out to the side of your screen, and then you can lay it out that way. So we have pattern trader, which is me. I'm also now. People understand patterns, right? Even children. If I said to you right now, apple, banana, apple, banana, apple, banana, what comes next? You're going to say apple because you understand the pattern. And what I'm going to teach you is as simple as that. Obviously, it's not, you have to put the work in because there's little things with candle patterns that you have to learn, and it's quite minute sometimes. Sometimes it's visible, sometimes it's not. So you have to have what we call kindergarten eyes. You have to look at it like a child and say, does that look, when a child draws a horse, you're like, is that really a horse? But you have to look at it from the eyes of a child, right? It's the exact same in the markets. So you can understand that, and it's so the pattern that we go by with the market makers. You have the price correction, consolidation, fake move, long sustained run. That's it. And when I point this out to you in the future, the actual lessons that I'm going to show you on the laptop and stuff and on the trading platform, you're gonna, once you see this, you cannot unsee it. You will be blown away. And one of my mates, Dion, who's a great trader, I showed him this kind of method that we use, and right away he was like, wow, like I cannot believe that you've showed me that, and now I just can't unsee it, and it's so true. And you can add that to whatever trading strategy you have, okay? Now, other methods of trading, you have swing trading, swing trader. Some people call it position trading. That's normally when for swing trading, what you're best identifying is the peak or the anchor point. So in the markets, you always have the highest point that it's been within that week, or the lowest point if it's about to go long, or the highest point that it's created if it's about to start going short. Swing traders really need to find the peak or the anchor. It's not really going to be worth your while. You can do it, you can get in a little bit later, but if you want to optimize and you want to get maximum returns, you really want to look for the peak and the anchor, okay? We also have scalping. Scalping is where you literally place about 20 trades a day to 50 trades a day, and you're just jumping in and out of the market, and you're collecting 1 pip here, 2 pips there, 5 pips here, 2 pips here again, 7 pips there, and you're just picking out all these little things from the baskets. Obviously that's what that does is it's fine, people can do it, but it increases your risk. Every time you step into the market, you're increasing your risk. Scalping is also pretty pointless if you don't have a lot of money in your account. I've saw some people do it in their accounts, and maybe they're just starting out, which is fine, but they're like, their profit's like £1.25, £2.13, 26 pence. So you're risking a lot to get nothing back at the end of the day. And you always have to pay a spread fee, which is usually around $8 or $10 per lot, per trade, and so on. So if they're doing micro lots, like 0.02 lots, then of course it's only going to be like 20 cents that they pay, but they still have to pay the spreads. And scalping, you're not going to make any big money with scalping unless you have a big account. Okay guys, so I think that is enough for today. We will cover more, maybe my next 2 videos are going to be more based on different styles and explaining the systems to you as opposed to actually teaching you how to trade. It is very important, but I mean, if you already know how to trade, you don't need to watch these videos. I'm just taking every single thing right back to the belly basics so that all of you understand from day one, and anyone who's new, who's coming on board, can watch these videos and they can get a better understanding. So my next 2 videos will probably be explanatory again, but yeah, let's see. Thanks for watching. I'm Ryan Mack. This is The Trading Guys. Don't forget to click on the link below or above, depending on which social media platform you're watching this in. You can set up a free demo account. You can practice as many times as you like with us, and you can blow as many accounts as you like until you become good, okay? Don't forget to like, subscribe, follow, and join up with our link above or below, okay? See you guys.